All right, today we're doing something a little different. We're going to decode a company's pre-IPO playbook. We're going to see what this official document really tells us about a business right before it asks the public for millions.
So have you ever wondered how you can get a truly unfiltered look inside a private company? I mean, see their numbers, their strategy, and even their biggest fears, all before they hit the stock market? Well, the answer is actually hiding in plain sight. It's called a red herring prospectus, or an RHP. The best way to think of it is as the official, super detailed instruction manual for a company going public. We're talking hundreds of pages, and because it's legally mandated, it's packed with all the details they have to disclose, not just the ones they want to. And to show you exactly how to read one of these, we're diving into the RHP of a company that has probably delivered something to your door, the Indian logistics giant Shadowfax Technologies. So let's use their own playbook to figure out what really makes them tick. Okay, so first things first, who is Shadowfax? If you've ordered food, groceries, or pretty much anything online in India, there's a very good chance you've interacted with their service, probably without even realizing it. At its heart, Shadowfax is what's called a third-party logistics platform, or 3PL. So they don't sell the product itself. They're the engine that gets it to your door. They're the critical link connecting huge companies. We're talking Flipkart, Zamano, Meesho, and Zepto, with this massive network of delivery partners who handle that final crucial step of the delivery. And just to be super clear on what a 3PL is, think of it like logistics for hire. Instead of a company like, say, Zomato having to build its own gigantic fleet of delivery drivers, they can just outsource that whole complex headache to a specialist like Shadowfax. So what's their secret sauce? How do they actually manage this incredibly complex operation? Well, lucky for us, the prospectus lays out their strategy quite clearly.
Their whole approach is built around these 3 V's. Velocity is all about speed, your quick commerce, your same-day deliveries. Versatility is about being able to handle literally anything, from picking up returns to delivering critical items. And value, well, that's all about being as cost-efficient as humanly possible. And all of that is powered by 2 absolutely critical pillars. First, their last-mile fleet is 100% gig-based, which gives them incredible flexibility to scale up or down. And second, everything is run by a unified tech platform that orchestrates the whole show, from routing drivers to processing payments.
Okay, strategy is one thing, but now for the really fun part, the numbers. This is where the RHP gets so interesting, because it puts hard figures behind all the corporate speak.
And we are starting with a huge one. From fiscal year 2023 to 2025, Shadowfax handled over 436 million orders. Just let that number sink in for a second. The scale we're talking about here is just staggering. This snapshot gives us a great overview of their place in the market. You can see they have about a 23% market share in 3PL Express logistics, which is significant. But the number that really jumps out is their delivery partner network. Over 205,000 unique partners in just a single quarter. That right there is the human engine making this entire operation run. Now this comparison tells you almost everything you need to know about their business model. On one side, you have about 4,500 permanent employees, and on the other, over 17,000 contract workers and those 200,000 plus quarterly gig partners. It's crystal clear. The business is fundamentally built on a massive, flexible, non-permanent workforce.
And no surprise, you see that exact same story reflected in their costs. Take a look at partner expenses. That's the money they pay out to their delivery partners and contract workers. It consistently eats up over half of their total revenue. In an industry known for razor-thin margins, this is their single biggest expense by a long shot.
Now, contrast that with employee benefits for their permanent staff. As a percentage of revenue, it's a much, much smaller slice of the pie, hovering around 10 to 15%. You put these 2 charts side by side and boom, you've got the entire story of their operational cost structure.
But of course, no RHP deep dive is complete until you get to the risk factors section. This is where the company is legally required to tell investors everything that could possibly go wrong. And honestly, it's often the most revealing part of the entire document.
The first major risk they list is client dependency. The RHRP is blunt about it. Their top customers account for more than half of their total revenue. So you can imagine losing even one of those big clients would be a massive blow to the business. Next up is talent retention.
And this isn't just about corporate jobs. The document is explicit that they face a real challenge in attracting and keeping their huge workforce, both the permanent folks and the gig partners, especially when competitors might be dangling better offers.
And there's more. They disclose a data breach that happened in fiscal year 2023. They talk about intense competition, the complex web of regulations they have to navigate, and even real-world operational risks, like a fire that actually happened at one of their facilities. This isn't theoretical stuff, it's the reality they deal with. So, after digging through all these pages of strategy, numbers, and risks, what's the big picture? What does this RHP ultimately tell us about Shadowfax? Well, for one, it reveals a finely tuned, tech-driven logistics machine. This is a company that has clearly figured out how to scale at an incredible rate, and they've done it by building their entire operation on the back of the gig economy. And second, it shows a company whose fate is directly tied to the giants of Indian e-commerce. Their growth is their clients' growth. But this also highlights their biggest risks, that heavy dependence on a few key customers, and the constant challenge of managing a vast, decentralized workforce.
And that really leaves us with a final, thought-provoking question. This RHP gives us an incredible window into the mechanics of a modern logistics giant. But it also makes you wonder, as technology makes delivery faster and more efficient, what does the future of delivery look like for the millions of people who are the human engine behind every single package?